Okay, socials. All right, let's get started. Hello, Smart Money Tree podcast listeners. Welcome to this week's show. My name is Kirk Chisholm, and I'll be your host. So today I'm joined with my good friend Doug Hagren. Hey, Doug.
Good morning, Kirk. How are you today?
I'm doing better than Friday. We should have done this on Friday, Doug, because I had a bone to pick with somebody, and I was piping hot. So yeah, we'll get into that in a little bit. But yeah, this weekend was a little more relaxing. I went to Sweat House twice to cool me down. Did some yoga. This is my year of health, so I'm trying to focus more on health this year as I'm getting older and trying to focus on having good habits so I can have a good health span instead of a good lifespan. So, well, let's just dive right in. So those of you know that I'm a big fan of renting versus buying, from a financial perspective, not from the emotional perspective, just to be clear. And actually, there was a good chart, which if I can pull it up, I'm not sure if I can. Here it is. So here's a chart. Oh, I was publishing the other stuff. All right, whatever. Here's a chart of buying versus renting. And so if you look at this, the cost to buy is well above the cost to rent when typically they're kind of intertwined for the most part. And during certain periods, during the housing bubble, what have you, that housing prices are a little bit high. This is crazy high. The difference being about 1,800 to looks like 2,800. Huge difference in the spread. It's more about the relationship rather than the numbers. But if you look at the ratio, it's a huge difference. What this tells me is if things can't continue, they don't. So, if you look at that chart and you see that the cost to rent is much cheaper, why wouldn't people rent? Well, as you all know, I've been a proponent of renting for a while, especially in Massachusetts and especially for higher end homes. If you're in Massachusetts, if you're in a home below 750, 850 in that range, it's actually cheaper to buy than it is to rent. If you're in a home above that, it's cheaper to rent than buy. During COVID, I moved out. I had a condo in the city and we couldn't go back. It was just tough. And I had two boys, so we just couldn't do it. So we moved out to the suburbs and rented in the quote unquote short term till we found a house. Well, it turns out that housing went through the roof and we were just like, yeah, we're going to pass. We're not going to buy at these crazy levels. And it's still there. Now, we've been looking because we certainly want to find a place, but so we looked and we were on vacation. We actually found a place. We're like, oh, this is cool. And the sellers, they keep dropping the prices. So isn't that great? Because it was already overpriced. And we looked at it and we're like, all right, I think we can probably bargain with them. Because I'm an old Scot. I like to bargain. I like a good deal. And so, we worked with them and we got them to reduce the price to something a little bit more reasonable. And we loved it. It was great. It was perfect. Great yard, nice house, looked like it was well maintained. A little bit further out than we'd like, but it was near farms, so it was a nice street. Everything was great. So we put an offer, it got accepted, and then we're excited. And the first day, I'm packing up all my books. I'm putting stuff in boxes. I was ready to go. I'm like, I'm doing this now, so when we're moving, I don't have to think about it. So anyway, so I go through all this stuff. We get the inspector. The inspector goes out. And I'm with him, and he's walking through the house. And I wish I had carved out more than an hour. He was there for like 3 hours. This guy was thorough. He was the best. If you're in Massachusetts, it's Tiger Home Inspections. This guy he'll find anything. If you want him to find it, he'll find it. So we're walking around the house, and he's like, oh, it looks like there was water damage there, and they covered it up. It looks like there was water damage there. They covered it up. And then we get to the basement, and he pointed out, he's like, see that line? He's like, that's water damage, the whole basement. And I was like, oh, shit. So we go through and I was like, well, it could have been 30 years ago. You don't know. Like, you don't know if it was yesterday or 30 years ago. Anyway, so we looked through all the stuff and he came to a few conclusions. Now, in Massachusetts, it is a buyer beware state. However, there are certain disclosures that have to be made up front. One is lead disclosure, which is silly because people just say, it's on you. And I guess if you have small kids, it's a big deal. But if if you have big kids or yourself, you're not going to be chewing on the windowsills, so it's not really a big deal, because that was really the issue. Is kids would chew on the windowsills with lead, and it tastes good, so that they'd get brain damage. Anyway, so there's lead disclosures, and there's also let's see, there's one more disclosure. I'm trying to remember what it is, but it didn't apply to us. Anyway, there's only 2 disclosures that are required in Mass. However, they can't lie to you. So if you ask them a question directly, they have to answer it truthfully. So if you say, hey, has there been water damage in the property? And they say no, and there's water damage on the property, well, that's misrepresentation. That's a huge problem. So there were 2 major misrepresentations. One of them was on the MLS listing. They said it was a 200 amp house. It was actually 100. The electrician said, this is 100 amp. It's way too small for this house. They need 200 amp. I'm like, well, it says 200 on the thing. He's like, well, they lied. And then we went down and I asked him, I said, oh, like, is there water damage? And the realtor's like, nope, no water damage. And so they lied about that. And I had to go put a chunk of money down for the inspector. We did a mold inspection. The house is hot with mold. It's like up to 3 times the acceptable limit for penicillium and aspergillus, which is one of the bad ones. It's not the worst one, but it's one of the bad ones. It's not something you want in your home. And that stuff comes from, wait for it, damp housing materials from water damage. Interesting. So I was like, well, that's weird. Maybe it happened and never got fixed. And so come to find out, and those of you who don't know this, it is a great secret. If you have a great insurance agent, they can find out if a house has had an insurance claim. And we did. We found out in May they had water damage in the basement, and they filed a claim in May and they listed it in June. And clearly they did the bare minimum because they maxed out their policy for what the amount claim was. They couldn't
get the check.
Yeah, they took the check, didn't clean it up, and they tried to sell the house instead of actually fixing it. So this house now has mold. It's got water damage. Oh, by the way, it came up hot on radon. It was 8 times higher than what's acceptable on the radon scale. Now, radon can be remediated. You want to be clear. Like, it's a lot of actually, we looked at the EPA radon map. It is literally everywhere in the United States, except for maybe like Florida or places where like the water level is like right there. But basically it's bad. And in some places it's really bad. And you basically have to put a remediation system in your home and it clears it up. So a lot of people have it. That's not a big deal, but it costs money. It's like $3,500 to get a system, up to 35, to get a system to clear it up. And then you're fine. So that was a problem too. So we went back and said, well, we need this fixed, need a radon system. That's clearly a problem. We need this fixed because you misrepresented it. Like it's a 100 amp system. You said 200. That's a clear misrepresentation. We want it fixed on your dime. And we want the basement fixed. And because we realized they hid a bunch of stuff, but one of them was like change the sump pump in May of 25. So let me try to think what happened. The sump pump failed, or they didn't have one. And the whole basement flooded. And then they put in a claim, and then they sold the house because they realized it was bad and they didn't want to fix it. So we fired back. We weren't at the PNS yet. So we fired back and we said, hey, these are problems. We want you to fix them on your dime because you misrepresented it. And we want our people to do it because we don't trust you because you clearly lied twice. And they said, no, we're going to push back. So, I'm mad because I had to spend that $2,000 to $3,000. I don't know what the final number is because we started putting in mortgages and stuff, but we want them to pay $2,000 to $3,000 because they lied. That's it. Like, I don't want to take them to court. I don't want to sue them, but I want my money back because I would not have put in that offer had they disclosed what those things were when I asked them. And so, and it's funny, I told the realtor, said there's one issue I have. This can't have mold. This house can't have mold because I have a mold sensitive kid. So it just can't be done. I said, that's my one issue. And so I was very clear about what the issue was. I was very clear up front. And I told, it was just like, here's the deal. And so they're like, yeah, no, we're going to pass. And I was like, all right, I want the $2,000 back, or, that's ballpark. And they said, nah, we're not going to do that. So I don't know if those of you don't know me, my Irish is getting pretty hot right now. I do not take kindly to people taking advantage of me. That's just my upbringing. That's the way I was raised, and F them. So I'm going to burn the house down. Not literally. I don't. I want to be clear. That was a figure of speech.
If there happens to be a house fire this week,
it's not me.
Better have a good alibi there.
Yeah, I did not do that. No, I mean, no, seriously though, like I am so mad at this, and I'm not going to go quietly into the good night. Let's put it that way. So anyway, so that's my story. So those of you who are in Massachusetts, I'd love to get feedback on this. Am I wrong in the fact that you can't that you have to disclose it? Because I know it is a caveat emptor state in some ways. But if you ask, they do have to disclose. And so my attorney's like, no, you're clearly in the right here. And the broker is probably in trouble for lack of disclosure and false misrepresentation and and a few other things. But frankly, I don't even think the broker is the problem. I think it's the owners that lied to the broker. The broker has responsibility, of course. But I think the owners have responsibility. So honestly, if they don't disclose it on the MLS, I'm gonna be all over that. And they made me mad. So I'm gonna make sure they disclose it. So F them. It actually would have been cheaper for them to fix this and to move forward than it is to piss me off. So just making that clear for anyone who knows, don't piss me off. So that was my experience. I'm past it because honestly, if they lied about that, who else? The inspector pointed out a bunch of shoddy work that was clearly not done to code. Like there was a pipe in the bathroom that is not up to code. They did the fix. It was clearly new work, and it would not pass code. So they probably got some shoddy work. Some guy down the street was doing plumbing and did some shoddy work, didn't pull a permit. So I'm thinking that probably happens. There might be other problems. So I'm okay, passing on this because it seems like it's a data pattern, and I don't like the data pattern. But the property's great. I mean, the house is great. I mean, there's a lot of things we loved about it. It's just the price was great, like all of it. So now we're back to I just got to make more money to be able to afford to live where I live, or I just keep renting for the next 10 years, which may be the way we go. I don't know. So anyway, that's my story. I'm sticking to it. I'm I'm trying to have some humor about it, but I'm not thrilled. So, what are your thoughts, Doug? Is it my fault? Is it their fault? I know you love me, but what are your thoughts in dealing with this? I know you've had to deal with house stuff before.
Oh, well, no, I mean, there's absolutely a requirement to be represented with truth and honesty. And right, I mean, you're right. There's certain things that they will put on the agreement or the contract, or the disclosures that you have to answer yes or no if you're aware of it. And of course, that's always easy to get around, by, well, we don't know to the best of our knowledge. But once it's been posted and a claim's been filed and you're the one that filed it, claiming amnesia is not really a very good, a really very good defense.
Not in a month.
Not in a month.
By the way, septic is the other.
Well, in their defense, aspergillus does cause, can have some, can create some issues with cognitive, and so maybe the mold was just so much that they are truly losing their minds. But here's from where I'm going to look at this. You have a lot to state, and I think if you watch it and it's not posted and updated. I mean, the thing that I see that's going to be that's a bigger picture issue here is you're going to see more of this. We're starting to see, and it is still extremely regional, but we are starting to see a higher number of markets in which there is where they're having a very difficult time moving properties. They're still building, with tremendous intent. Which means that, again, the way that that the efficiency that they're building. And again, who knows, it may not be as efficient after some of these ice raids, but before that, the efficiency at the level of that they were building, supply of homes is spiking fast, and you're starting to see more builders that are doing, increasingly aggressive incentives, including their own, we've talked about this before, their own financing. But, when you have a spike in supply, which is exacerbated by the fact that it takes a tremendous amount of income now to afford the same level. We've talked about this forever. And again, real estate pundits love to push how housing is needed, and that housing is recession proof, which again, there's tons of evidence that it isn't, and that it's emotional and people want houses. The fact comes down to it, it's very much, just because it is driven by interest rates in many ways, very much like the bond market. And as we've always said, stocks are emotional, bonds are math. And so is the case with real estate. It is extremely emotional too, but it's also mathematical, because it comes down to the fact that you've got to be able to get the financing, and the financing, for most circumstances is going to be tied to what those interest rates are. So, we're seeing about 50% of the major markets now are seeing major price declines. Austin, Texas being by far the worst, being, well over close to 6% change in prices, but it's still very regional. So if you look at places like Hartford, Connecticut, a place that everybody wants to live and lines up for, they're still seeing Connecticut, over 4% growth. So Boston, Massachusetts is still showing year to year between June 24 and June 25. You're looking at Boston being around 1.5% growth, increase in prices. So the prices are not falling, but supply and the amount of time that, houses are staying on the market is still something that is growing. And, if we take a look, obviously at some of the greatest, price changes, they tend to be in the South, Texas, Florida, California, along, the Pacific coast, Oregon, Seattle. We're seeing some of that, obviously Phoenix, Denver. There is a little bit going on in your neck of the woods, not so much in mine. What's the point of this? It's that you're going to see, for those that want to sell, an increasing level of desperation to do so. But that desperation is going to come in a couple of different means. It's going to, first of all, that desperation may come in price cuts, but that's not going to be the first thing that they're going to do, because we have a massive amount of equity sitting in homes right now. It's been this case for a while now. I'm trying to find the chart that I've got on it that I posted. If I can't pop it up here, darn it. Well, it's nope, that's home price history. Anyway, I can't find it right off the top of my fingertips, or the end of my fingertips, whatever the saying is. It's Monday. I'm tired. The point being is that the significant wealth in this country specifically, and of course elsewhere in the world, is sitting in equity in real estate. And there's only two ways to tap it. Okay. Equity is one of those things that people get very proud of, and they get very proud they paid off their homes and they don't have any debt, and they got this wealth. But the reality of it is there's only two ways to tap it. One of those is to liquidate the asset, and the other one is to borrow on it. So it's extremely illiquid. It is very hard to utilize. If you need to utilize it, if you want to utilize it, you got to sell your house. Okay. Well, again, there's going to be a behavioral shift that will occur when the market truly adjusts, that will finally get to a point in which sellers will come to the conclusion they're going to have to adjust those prices. Okay. And that's going to happen either because they come up against a wall, which is less likely until death occurs. Okay. Up until that point, do I have to move? It's only going to be based on pure affordability. And if they can't afford it, if it's paid off, if they're not being squeezed, then there's this gray area wall that they're going to come up to. They don't, where they don't have to make this decision. Death will be the one thing that absolutely does it, or financial distress will be the other. The first thing they're going to do, and brings it full circle, Kirk, is that they're not going to want to drop the price because they believe emotionally that this home is worth what I'm seeing on paper, what Zillow's telling me, what my neighbors were getting 6 months ago. So it's the first thing. What you're going to see more of is you're going to see this. You're going to see people trying to keep the price and adjust and sell their homes by being even less ethical about what that home has than it was before. The first thing they're going to do is suppress the truth because they want to get that sale. And there's going to be ways in which they can get around it legally, where I just don't bring it up and nobody asked. And then they're going to start getting into situations where when you are asked, they're going to skirt around the truth. They're going to try to find a way, more and more ways in which they cannot answer that directly. What's going to happen from there, unfortunately, is the ugly truth for the seller. Because now the circumstances, they've put their foot in the sand. They're not going to move. You're not going to cross this line. I'm going to sell at this price. But guess what's going to happen? Now this disclosure must be posted. It's been asked. You must answer it. They must update their data. If they don't, now it's fraud, which means guess what? What's going to happen with the seller the next time someone comes around? You're either going to run into a completely emotional purchase from a buyer that just doesn't care. Either they have more money and they don't care. They're thinking 30 years and they couldn't care less. And they just want the location. They want the home. Or they're emotional and they're going to make that purchase because they want to be there and they're going to stretch themselves. Or they're going to be too ignorant to ask or look. But the reality is, guess what that seller is going to probably have to do now? The one thing they didn't want to do with you because they were emotional about it. They're not going to get into this. You're forcing us down. That's not going to happen. You're not going to make us pay. The next person is going to come along and they're going to offer them less money. And they're eventually, if they really, really want to sell this house, they're going to have no choice but to adjust that. And now the data's out there. So you're going to see a lot more of this going forward. And I think because there is going to be a continual pressure. When you look at the numbers we just talked about what it costs to have a house over rent, that line's got to readjust. It comes back to the mean.
Yeah, it's interesting. You make some good points, Doug. And by the way, the other disclosure other than lead paint is septic. So they do require Title V septic, which I think is reasonable. And that came back fine. It's interesting because your point's valid. I mean, we're looking at, and I'm showing the U.S. home price history from basically 1890 to 2025. It's interesting to look at, but I will say, in looking at this, like it looks like, oh my God, the 2025 bubble is crazy. I will say this. One of the interesting things, it shows the 2006 bubble and the 2025 bubble is even higher. This is inflation adjusted. 100%. Now, I want to key on this point because, yes, while real estate's expensive, inflation adjusted metrics no longer are valid in the sense that they used to be because the CPI is doctored. There's no way that we didn't have 100% inflation rates basically right around 2020 during COVID. There's no way. And yet it was 8-9%, something silly. I mean, there's no way. We look through the numbers. You can go back to listen to our rants during that time. There's no way that the CPI was as low as it was. So the point being is, if they said the CPI was 10, let's say, let's say it was 10% a year over 2 years, right? So 20%, and it's really 100. Well, what happens is that the house prices, which are up more than 20 over that period, now they're up 40. Well, now it skews the metric because what inflation adjusted is basically let's just say house prices mirror the inflation, which actually over hundreds of years it has. I think it was like 2%, 2 to 3% above inflation, historically pretty flat until 2008. Or right before that, 2005 is technically when it peaked, till that period, and that spiked. And then we've got another spike because what happens is you have inflation, which is kind of putting along at 2-3%. And then you've got house prices go way up here, Well, it goes up there because inflation's really higher, but they're not reflecting it. So I stopped looking at government numbers long ago because I know that they're BS. It's almost not even worth reporting them. It's like saying, all right, there's nothing. It's like that scene from Naked Gun. Frank Drebin's in front of the fireworks factory. Nothing to see here. Go about your business. Nothing to see. You know, people are dying. There's like explosions. Nothing to see here. You know, that kind of a thing.
The old one or the new one, Kirk? Because they're
I
coming out
know.
with a new one now with Liam Neeson.
Yeah, I can't wait to see the new one. It's that's so good. I'm not sure if the new generation will appreciate it quite as much because it was so good the first time, but it was that generation comedy. You know, we had a lot of those kind of movies. You know, you had The Princess Bride. You had a bunch of those. So anyway, but you know, I think what's important to take away from this is that housing's really expensive. It's starting to come off, except for places like Boston, which I think are pretty well insulated. However, the town I live in, it's you know, it's definitely still competitive. But if you go a few towns out, the prices are starting to come down, which is good. So my patience may pay off where I may be able to find a house eventually. But we definitely started to find some a few weeks ago. So, you know, I think I'm fine waiting. I'm not in a rush. I mean, those of you on listen to the show know my stance on this. Like I don't have to move. Like we're in a good position. It's cheaper to rent than it is to own, but I do want to own. And so I had a conversation with a bunch of advisors the other day that I was mentoring, and they were like, yeah, but you know, they told me, because I told them I was buying a house, and they were like, yeah, but you said this. And I was like, I know. I said, you have to be able to, what's it, Fitzgerald, who said the sign of a first-rate mind is one who can hold two competing thoughts in the mind at the same time and still operate. Like, you should be able to do that. Yes, it is more mathematically correct to rent than it is to own. But it doesn't mean I don't want to own. And it doesn't mean I'm not willing to pay a little bit more to do that, because a home, remember, is a personal expense. It's not an investment. I'm not doing this from an investment standpoint. I know it's not an investment. It's a personal expense. It's like buying a car, except buying a car depreciates, a home appreciates. But if you actually run the math, and we do have a page on our website which actually allows you to run the math for a property. If you run the math, you'll realize the home is not really an investment. No. You have to put CapEx in every year. You've got expenses well beyond rent. There's a lot of things if you really calculate it up. And there's also the opportunity cost of taking that down payment and putting it in the market, earning whatever, 6%, 8%, whatever it is. And that growing. It actually, it will be break even to own a home.
If you're lucky.
Yep. Yeah, if you're lucky. I mean, over a long period of time, it's probably fine. Actually, over the last 20 years, it's probably fine, because the last 20 years, house prices have gone crazy. But if you look back, like, you know, going up to 2000 or a little bit before that, when things were normal, it's definitely not an expense. It's definitely not an investment. It's a personal expense. So we'll move on because we got bigger things to talk about. But I did want to talk through that because I think the 2 points to take away from that are, A, it's important to understand housing and all the things behind it. And B, it's also important to understand how to make good decisions. So the context of what I talked about just to the people I mentor is decision making. It's not about whether I chose this and then changed my mind, which, by the way, we can all change our mind. Just because I said I believe in this, it doesn't mean I can't go do the other thing, right? I can believe in both things. But the thing is, the way to make a good decision, and there's actually a great book called Decisive, and I don't have it here. I'd show it. It's called Decisive. Great book. I think it's Chip and Dan Heath, I think it was. But it's a brilliant book. It actually walks through frameworks on how to make good decisions. It is really a good book. And it's helped me immensely in many areas in making good decisions, especially decisions like this. I mean, this is a decision that was really expensive if I effed up, right? If I buy a house that turns into the money pit, if those of you remember the movie, you're just shoveling money in, that's not a good investment. And frankly, you know, it'd be better to overpay and not have problems than to underpay and have tons of problems. So, you know, I think the reality is when you're looking at making a big decision, It could be investing your money. It could be buying a house. It could be buying a company, starting a company, whatever that decision is. It's really important to go through the decision making matrix of, is this a good or bad decision? How am I thinking about it? Am I emotionally involved? Right? Because we all have emotions. I was emotionally involved. I wanted the house real bad until I found out there were problems. And I was like, nope. And my wife and I talked about this. She's like, do you think we should do it? And I was like, what is our one sticking point? Mold. What is the one thing that we found in the inspection report? Mold.
Oh.
I mean, I still want the house, but that's our sticking point. That was our line in the sand. Now, if they remediate it, would I do it? Yes, because mold can be remediated. I know how to do it. We went through this last year. It can be remediated and fixed up, and there's no problem. The problem is it can be really expensive.
Yeah.
So if you know about it and you don't fix it, it causes health problems. If you fix it, it all goes away and it's fine. But the cost could be 10,000, could be 80, 100,000. I don't know. Like, it depends on how much of a problem it was, how long it's been there. Like, there's all sorts of issues. So that is the underlying issue that has to be dealt with. And I think as you're going through decision making, it's something to think through. It's hard to remove the emotion, but it's important to do it. All right.
Can I just say
go ahead real quick?
Because I love that you brought up the book Decisive. By Chip Heath and Dan Heath. I think, and you talked about real estate. You talked about not only the purchase, and like I said, it is one of the only real estate is one of the only assets out there that is truly, in my opinion, alone, which probably means I don't know what it's worth there, Kirk, but it's probably truly the only one that is perfectly balanced between emotion and finance. Everything else skews one or the other, right? But this is the one where we are subject to making a very emotional decision about something that is, from at least a numerical standpoint, is very, very analytic, very mathematical. What I liked is you talked about, on your website, this calculator, and I run this for clients too, like how should we buy or rent? And there's so much more to it. One of the things that they talked about in that book is widening options, this getting stuck in that narrow framing of should I do this or not? Something that I believe, is unfortunately more common in the decision-making that people make every single day. And there's a great point that they make in the book is instead of yes or no. And this happens all the time. And this is big. And we talk about finance. We talk about decision-making. We talk about behavioral finance. Is taking that step and taking action is the only way to achieve any goal. Deal with this with college funding and planning too. People see it black or white, yes or no. I'm going to do this or I'm going to run away. That is not how we make the best way to make decisions. The other way is to say, what else could I do? And without getting too deep into the book, it also talks about the emotions clouding judgment. Okay. And again, going back to the real estate, again, and I mentioned this a little bit. So gain perspective by zooming out, like, okay, it's not what would my best friend do in this situation, because that is where we get caught up with, the Joneses and what other people would do. But what would, remember the whole saying, like if there were a fly on the wall or if my boss was watching, how would I do things differently? One of the things they also talk about is, what would I tell my best friend to do in this situation? Because that's going to cause you to take more thought into the decision around other variables than just good or bad. As a friend, you would consult them with much deeper thought. Anyway, just a couple of things there I thought were really, really relevant to the things that we talk about because of the dealing with the people in our world have to look through in order to avoid emotional or narrow frame choices like panic selling, overfunding college, or, as you said, buying a home that has mold when mold is the one thing you absolutely said you wanted to avoid.
So, all right. So let's move on. We'll come back to my anger later. So I wanted to talk about crypto, the big news in crypto this week. So there's three different bills going through our government. There's the Genius Act, which is about guiding and establishing innovation standards for stablecoins. That has actually been enacted into law last, maybe it's 2 weeks ago, on the 18th of July. It was bipartisan, which is great. And it's basically a regulatory framework for stablecoins. I think it's great. You know, the government's been fighting this for a long time. Why has the government been fighting it? Maybe it's the banking sector that has something to lose. Well, we don't know, but we can only speculate. So, you know, stable coins have been passed in terms of framework, which is great. This allows people to come up with new stable coins, which I think will be the next iteration of currency moving forward. I like the fact that the US has actually moved forward on crypto and blockchain, because if we don't, other countries will, and then innovation goes there. We've seen this in the past where we've outlawed things and then other countries do it, and then we lose billions of dollars in revenue. So it's great that they passed this. There's another one called the Clarity Act, which is also going through. It has not been passed yet, at least to my understanding. But it's also a bipartisan bill, but it's basically to establish a comprehensive framework for putting regulatory authority over digital assets between the CFTC and the SEC. We'll see what happens with the end result. But the point being is it will be regulated, which also is a good thing. Now, I'm not a fan of government overregulation. I think it's a problem. I think we've gone way to one end of the spectrum where it overregulated and was used as a baton to beat people with. I've heard plenty of stories in the last 4 years where the administration was going after people for basically First Amendment, issues, which is crazy to think about. But the point is I think it's great that it is regulated, because when it's unregulated, you have things like Coinbase. There were a few others that were basically saying they were formally disclosing all of their stuff, and the SEC basically said, no, you're in violation, but you didn't give us any guidance. You didn't say yes or no. And so it was this back and forth of, we want to beat you with this baton. And I think it was all coming from the banking sector. I'm speculating, of course, but I think the banking sector is what was basically putting its thumb on everything, saying, no, you're not going to do this, because they have a lot to lose. Now, they can make money from it, but their whole business structure is potentially out of favor, let's just say, if all of this stuff comes to pass, unless they innovate, which of course they are not good at innovation. So that could cause a lot of problems for the banking sector long term. So that's the Clarity Act, which I think is also good to have some regulations, ideally light regulations, but enough of a framework where it keeps the fraudsters, because that's really what you're doing with the regulation. You're keeping the fraudsters out of people's hair. And I think if you can do that, then it makes everything a better place. Even though I don't like government oversight, I think if you can get rid of the scammers, it makes it better in many ways. And yes, it'll still happen, but at least it'll get rid of most of the riffraff. And then the last one is the Anti-CBDC Surveillance State Act. Now, the first two, I think, will the first pass. The second one will pass with no problem. The third one, everyone's excited about it, but do I think it's going to pass? I'm not so sure. Now, the Anti-CBD Surveillance State Act, here's what I think is going to happen. And you can come back to this 10 years from now and you can mark it as correct, because here's what's going to happen. It's either not going to pass, which I think it probably will, because there's a lot of push to get it passed. So I think it'll probably pass. Not sure, but it'll probably pass. However, I think what'll happen in some future time, maybe 4 years from now, or 8 years, or whenever it is, when there's a more pliable politician in office, and they'll come in and they'll do their thing, and this will sneak under the radar. It'll be pushed into some other big pork bill, kind of like when when people objected to Congress insider trading, and then they outlawed it. They outlawed it. It was like, I don't know, 8 or 10 years ago. And what happened wasn't even a year, where it kind of slipped back into some other bill. They're like, oh, well, we need to do this. And it was in like Christmas Eve bill, like no one's there. It was one of those. So I think the same thing's going to happen. Even if it passes, somewhere down the line, some Christmas Eve bill, no one's paying attention. They'll slip it in and say, no, this is no longer valid. So I think this is the linchpin for the surveillance state on our financial privacy. I'm not in favor of a CBDC at all. And by the way, if you don't know what it is, it's a central bank digital currency. I do not want the government having insight into my spending habits. I know they can, and they probably do through the NSA and all that, but I don't want them to have easy access to it where they can just shut off my currency at any time. I don't need that. No one needs that. That's a really bad precedent. We'll all be bartering with each other if that starts to happen. So I don't think that's a good idea. I don't think it's needed. I think it should be free and open. I mean, I love cash. I think cash is great. You know, they're trying to reduce cash so they can have more surveillance. So I think all of it, despite the fact that, yes, there is crime being perpetrated, money laundering, the government has enough tools to find those people and to stop it. They don't need to crack down on everybody else, just to be clear. Like, yes, it happens. The banks let it happen. You know, they let it happen. And once in a while, they get slapped on the wrist. But that's what's going on. That's the big news. I think it's great. We'll see what happens with the other two. But those are my predictions. Either it doesn't pass or it passes, and then shortly thereafter, it gets stuffed into another bill that they revoke this part of it, the third one. So that's what's going on in crypto. Obviously, there's a lot of excited people. A lot of people are excited about this. If you look at the crypto world, you know, Bitcoin is certainly higher. It's bounced up. It's up in the 120, 118 range, which is great. You have Ethereum, which has started to take off, which is great. It's hitting close to all-time highs. So, you know, personally, I've taken some money off the table because we got in a lot lower, but still have a position because I still believe in it. I think it may, you know, who knows? Maybe we'll see a pullback, which would be great. But I think the 2,300, I think, is the intrinsic value, which is great. So that's actually a great level to look at for support. So if it ever gets back down there, I think it's a good opportunity. So but I think overall, I mean, those are the only two I look at. I know there's a bunch of others. There's Solana, there's a few others. I don't really follow the others, so I'm not an expert, and I'm not going to pretend to be on the show. But I do think it's good to recognize that this should buoy the whole crypto market. So for those of you who are crypto bugs, you should be excited, and those of you who aren't, that's okay. But yeah, just something to keep in mind. Let's move on to, where are we here? Here we go. All right, so let's move on. What else we can talk? Oh wow, Doug sent me a lot of charts. All right, so I want to show you a chart crime. I don't know if you want to do it, Doug, because this is really your thing. You sent me this beautiful chart crime, and it's a chart which shows strategy, or MicroStrategy, formerly known as MicroStrategy, Michael Saylor's company, which has gone up 3,260% in the last 4 years. 4 years, 5 years, somewhere about 5 years. And Tesla price change is about 220% higher. What's wrong with this chart, Doug? This looks like MicroStrategy's strategy has done really well. Why is this chart? What's wrong with this chart? I don't understand. Doug's laughing, and he's muted. He's laughing so hard he's muted.
It goes so far beyond this chart to the comments and the interpretation of the entity that posted it, where they actually said, well, Michael Saylor is the greatest, one of the greatest CEOs ever, clearly way better CEO than Elon Musk has ever and will ever be, using data since 2021, where, I don't know, prior to that, looks like they were kind of lined up a little closely. And yeah, kind of lined up a little closely there between 2022 and 2024. But we're using 4 years of data to look at a company that has admittedly blown up with the price of Bitcoin and strategy, to show that obviously Michael Saylor is, much better at running a company than Elon is. My laughter to this is, does anybody do history and research of Michael Saylor's previous iteration in running companies when he ran at least one, into bankruptcy after the dot-com implosion of the 90s? I mean, he was considered to be one of the biggest idiots in tech, my words, basically laughed at by everybody in the tech sector until he jumped on this MicroStrategies MicroStrategies methodology of taking debt and buying, through convertible stock, a massive hoard of Bitcoin, which has fortunately taken off. Never mind that we take a look at Elon running SpaceX, the solar company, Tesla, PayPal. Was it PayPal? Yeah, all of these companies that he has started, all of which are household names over the last 20 years. It's just unbelievably one of the worst chart crimes I have ever seen. Yes, 4 years the stock has outperformed. Elon's what a bum.
Well, I do want to point out that it's an interesting. I'm trying to get my. I'm trying to get this chart up, and it's not helping me. But if you look at here we go. Let's see if I can share this. If you let's see, replace. Here we go. All right. So here's a chart of MicroStrategies. Now strategy.
Because there's only one strategy, and it better darn well work.
Yeah, and I honestly don't know his history with the company, but here's a picture of the company. Okay, so it's spiked up in 2000. It's been pretty much flat, and then right after 2020, which by the way, this is when he kind of changed his tune. What happened was his company wasn't making money, and I don't know if they were losing. They might have been break even, but they definitely weren't growing. And what he decided to do is he decided to buy Bitcoin in his treasury, and Bitcoin went up, and all of a sudden his stock started to go up. And so his fortunes, his future was tied to Bitcoin. He was, I think, the first CEO to put company treasury money into Bitcoin. And then what did he do? I think, I can't fault him for that. You're running a company. It's up to you. If you decide to do that, that's totally on you. I think it's if you have no growth, why not? Right? If you've got a pile of cash earning zero and you put it into Bitcoin, it earns a few 100%. Why not? Like, I mean, I don't see any issue with that. Now, granted, it makes the company riskier, right? Because it could go to zero and you could lose all that money. So it makes it riskier. But, I can't fault it for that. I mean, CEOs do crazy stuff all the time, right? You start a new product line that fails. That's crazy too. So I don't think it's totally crazy to do. And I think, it was initially, and what he did was he found out how to do it better. So it wasn't just, we're going to put Bitcoin in. He's like, we're going to do financial engineering. So we're going to borrow money at like 1 or 2% or whatever it was and buy Bitcoin. And we're going to do convertible bonds, which is effectively getting a convertible bond for 0% interest, which converts into shares later, or which is basically shares equal, Bitcoin. So basically you're buying Bitcoin with it. I don't, he's found ways to work with Wall Street to find ways to financially engineer better products for Wall Street and to grow his company through the price of Bitcoin. So I find this fascinating. I'm not a fan. I'm not investing in this with clients. I think this is basically let me put it this way. I've had a friend explain this to me. I've had a lot of videos where it's been explained. It still feels like a Ponzi scheme. It feels like a Ponzi scheme. I'm not saying it is. I can't figure it out. So here's Tesla, same chart. Obviously it's not the same chart, but similar chart. Here's Tesla. So, you could try to compare them. I think that they both bring very interesting things. I think Michael Saylor brings some interesting math into the equation. I look at it and see this is played out like a Ponzi scheme. Now, I'm not saying it is. I want to be clear. I'm not saying it's a Ponzi scheme. I don't want to get sued. And frankly, I don't know that it's a Ponzi scheme, but it feels like one. So I've seen a lot of frauds. I've seen a lot of Ponzi's, like I study this stuff because we see it all the time. Like people come to us, we're like, oh, buy my stuff. And I look at them like, this is a fraud. Like you can just tell. So I have a lot of experience noting these things. So when I see this, all the spidey sense in my head is ringing. Oh my God, this is a Ponzi. But I don't know that it is. It just feels like one. It's like, so you're going to buy Bitcoin to leverage more bonds, to buy more Bitcoin, to get more bonds and buy more. It's like, where's the business? I mean, there is no business. I mean, there is a business, but it doesn't make any money. So what happens if you just, and so here's my question to him. Why even have a business? Why not just fire all your employees, get rid of all the products, get rid of all the expenses, and just have you running the company? And all you're doing is financially engineering Bitcoin. What's the difference? So I try to look at an equation and I try to split apart all of the pieces. So what is it? It's a business that does something. It's software, but it does something. And I don't know. I don't know if some people know what it is. I don't even pay attention because it doesn't make money. It's just break even the way I understand it. So you've got a company that breaks even. Why have a company? It's not going to grow. He's realized he can't grow it. That's why he started doing this. So shuttle that whole thing, sell it to somebody, keep everything else. Now you've got a company. Now you've got a company that's basically a treasury for Bitcoin. You're a holder of Bitcoin, and you're selling bonds to buy more Bitcoin, selling bonds to buy more Bitcoin. How's that any different from a Ponzi scheme? How's that any different from what the federal government does or what banks do? I mean, banks effectively go bankrupt if they have losses because they're leveraged 5-1. In some cases, in the housing bubbles, like 20-1, which means if you lose 5%, you're bankrupt, right? You're done. You're insolvent. So when you leverage that much, so if Bitcoin goes down 50%, are they bankrupt? I don't know. That's the whole thing. I can't figure out where the hole is. I just know that it makes me feel really uncomfortable because it feels like a Ponzi, but I don't know that it is. That's the problem. It's like if he did this with cash. So let's take this scenario and reposition it. So instead of buying Bitcoin, let's say he buys cash. Okay. So he buys cash and he uses that cash to buy bonds. And that bonds gives him more cash. And he takes that cash and buys more bonds, right? Or he has that cash and the bonds are basically created because he's got a lot of cash, which now he raises more cash. So it's this infinite loop of you just keep growing your assets even though nothing is happening. And so it's like taking money from one pocket and put it in the other pocket and say, look, I have more money. It's like, no, you just took it from your other pocket. It's still yours. Like, that's how it feels. So basically, what if the cash went down? Okay, so now you're insolvent. Like, that's kind of what it comes down to. It's like, this is all based on one asset, Bitcoin. And if that asset goes down, so if the asset goes to zero, the company's bankrupt. I'm pretty clear about that. But even if it doesn't, even if it goes down 70%, so it goes from 170,000 down to like 30,000 or 120 down to like 35,000, right? So it goes to 35,000. Is the company bankrupt? I don't know. That's the point. So all of these are questions in my mind of what if, and I can't put my finger on it. Like, is there something that's going to cause it to go bankrupt? Don't know. But I think this is the hubbub around strategy, is that what is going on there. And I'm still studying it. I don't have an opinion other than it feels like a Ponzi, but I don't know that it is. So anyway, if those of you have opinions, please send them to me, because I'd love to look at videos and other research that shows me one way or the other, because I just can't put my finger on it. It just feels weird. Go ahead, Doug.
Well, what's interesting? So I wanted to go back a couple. So yes, he did found the company in 1989. Business intelligence, data mining, and then they had a lot of contracts with McDonald's and others. Basically, doubled day one when it IPO'd in '98, worth $7 billion. By 2000, they had a massive SEC investigation on accounting misstatements. They never admitted wrongdoing, but it crashed them and eliminated it. His net worth. And he was CEO until 2022. He transitioned that CEO role away, and in 2020 spearheaded the pivot towards Bitcoin, and initially investing $250 million. Ironically, guess who also started to accept Bitcoin, several years ago? Tesla, right? So it's kind of interesting that there is this alignment there. But what is the difference between genius and stupidity? Sometimes it's dumb luck.
Not much.
Yeah, sometimes it's just dumb luck. And so, yeah, he went all in, and he's a genius because it obviously has worked out. What's interesting about, I completely agree with the feel and the structure of how this sounds like a traditional Ponzi. And it's been a challenge that when I've looked at it as an organization too, is that basically you're right. Give us more money, whether we borrow it or you inject it, and then we'll take that money to buy this thing, and then we'll return the value through our stock price to you, but only due to new money coming in. If Bitcoin crashes, there's a margin call because there's a lot of debt out there. The way he's worked around this, which is very interesting, it makes this unique, and it's something he continues to come out and state, is that if the money is financed through public equity and zero coupon convertible debt. So it's a leveraged bet on their appreciation. His argument is that if Bitcoin collapses, we'll just replace the debt with convertible stock. The irony of this is, that's a clean and maybe legal way of getting away because people need to know what they're getting into and they signed on that debt. Now, that doesn't preclude lawsuits, but the reality is if Bitcoin were to crash, therefore crashing the value of the company, therefore he's paying you back with a stock that is worthless. So he has this loophole to get out of it, which is very interesting because typical Ponzi's, they don't, right? They have to liquidate their assets basically. And if they get this call, which ironically is like banks, which we talked about, the bank term lending program that had to go into place because these banks didn't have the liquidity to deal with the massive, withdrawals and distribution demands. If he gets this withdrawal and distribution demand, he can basically give you paper, which most Ponzi's, going back to Madoff and all those, that's not the case, right? Because the money's been spent or it's been given out to other people. So if you want your money back, you're promised a certain value of return, and then they can't meet it, and that's when the house of cards implodes. He can literally pull, a Picasso. He can give you a napkin with a little scribbling on it, say, there you are, you're paid off with our stock. This is an incredibly unique structure that has given to him. Has never, in my opinion, from what I've seen, never been tried before. Banking on one asset of investment and basically being able to give you stock if it liquidates and goes away. And here it is, just kind of like owning stock in the Green Bay Packers. Put it in a frame, slap it on the wall. You can't redeem it. There's no value. Now, as long as Bitcoin goes up, the argument of this chart, and then we'll move on, is it's saying he's a great CEO. Their time has shown with accounting errors and other types of, of claims against him, not a great CEO, right? Obviously, Elon has been CEO of multiple companies worth multiple billion. He's worth 400 plus billion now. They're estimating him to be the first trillionaire. You cannot compare the two as CEOs. Could he show that he made the greatest bet in history? Time will tell, and that may not be arguable. But CEO is about running a company's beyond that, and I think this chart is one of the worst crimes I've ever seen. So
let's wrap it up, Doug, in the interest of time here.
Yeah, absolutely. So we're coming up against it. So, if we take a look at stuff we've talked about and, having your stuff in the right place, as people know, my company, Mergent College Advisors, we don't help families just pay for college. We help strategically fund in ways that protect their future, strengthen total wealth picture. Smarter college funding decisions aren't just about the next 4 years. They're the first step in a broader strategy to ensure you'll always have money for the things you need, and that it's also efficiently positioned to maximize the freedom to do the things you want. How do we do that? We bring clarity to the chaos of financial aid, merit awards, tax planning, retirement protection. So you can stop guessing and start planning with confidence. The right plan will change everything. So if you're ready to make smarter college funding decisions and ultimately make smarter wealth planning decisions for everything you do in total, let's talk. Because smart money doesn't guess, it plans. Look us up, Mergent Advisors and Mergent College Advisors. It's spelled MERGENT. Look forward to talking to you soon.
Great. Well, thanks for coming on, Doug. And that's the show for this week. Thanks again for joining us on Money Tree Investing Podcast. My name is Kirk Chisholm, Wealth Manager of Innovative Advisor Group. We don't just manage your wealth, we make your life better. You can find more about me at innovativewealth.com. And of course, you can find me every week here on the show. Please remember to subscribe to the podcast and the podcast app of your choosing. You can also check out the show at moneytreepodcast.com. On our website, you'll have access to the show notes, resources, and the archive shows. Please check out our YouTube channel. When you're there, please subscribe and leave a comment. Lastly, please leave a show rating and comment on the podcast app of your choice. And don't forget, do your own research. This show is for informational use only. We're not telling you what to think, merely how to think about investing. We're not selling any products or services, so do not consider this advice. If you have any problems with the show, I blame Putin. Please send an email, express your feelings. If you're seeking financial advice, talk to an oracle or fortune teller, maybe just a licensed financial advisor. I'm one, but as I said earlier, I'm not selling anything. But I'm easy to find. Have a great week ahead, and remember, no one will care about your money like you do. So invest in your life.